The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time, and we have some volatility continuing in the market action. Yesterday, you talk about an acceleration to negative prices. We have negative prices this morning, and we're getting it all back, though. We have China retaliating. How about the headline? We'll kick off with it. 84%. Am I not signed in? What's going on? I'm not signed in. I'll get signed in to Bloomberg. 84% tariff retaliation rattles the market. That's the headline, folks. Retaliation this morning. And we get to the numbers. 7 a.m. was when that number came in. You dropped about 400 NASDAQ 100 points in about a heartbeat. But guess what, folks? We're up almost 400 points from where you were trading at the lows. NASDAQ 100, we're positive this morning. You could expect that was going to happen, right? You could expect there was going to be a retaliation after China coming out and saying that they're going to fight to the end or whatever it is. You get the retaliation. We'll see if there's an off-ramp. But boy, yesterday, markets, and you talk about it, just on a short-term basis. Now, we had a little bit of light volume on yesterday's action, okay? But it was remarkable. I reminded myself, I got off the air at 10 o'clock yesterday, and I said, Basil Chapman's coming up next. Not sure we'll see thousands of points of movement as we saw on Monday when you got that headline that there was a 90-day pause and whatnot. But, folks, the Dow yesterday traded from 39,600 and we hit a 36,000 handle early this morning. The volatility, man, is everywhere. We have the VIX spiking yet again. VIX 51.69. We just topped out where we were again last night. You had a high of 60 when we opened Sunday night in the futures. Now, let's get into some price and volume on the indices yesterday, because quite a day in the markets volatility-wise. What is interesting in this market is you're almost at a 1 to 1.618 expansion in terms of the move you had that began February 19th. You trade lower, you catch a bounce, and now that number would have brought us down to about 47, 46. We were within about 80 points of that price level, which is quite a number when you're talking about starting that formation at 61.66. Okay, that would be quite a move, to put it lightly, but let's take that off and let's look at the volume numbers. Friday and Monday were extraordinary, and Tuesday, yesterday, a little bit of lightening up. Even on the pullback we got, you see the move. Friday's action on the S&Ps, 3.45 million contracts. Monday's action on the bounce, a little bit more than that even. And then the pullback yesterday, only 2.3. So you go from 3.5 million contracts on Monday to 2.3 million contracts yesterday. We'll see how today holds, and that's in the S&P. On the NASDAQ, not quite as pronounced, but pretty similar. As you had Friday's action, the most volume, you catch a bounce on slightly less volume, and yesterday's action, under 1,940,000 contracts. Dow, similar action. Friday, the big day. Monday, slightly less. And again, volume backing off a bit on Tuesday action with 226,000 contracts traded. Now, we got to get to yields and the dollar and gold, of course. Okay, so I think it's at 1 o'clock today. You're getting $40 billion worth of 10-year treasuries. When this move first began with tariffs, there was a lot of talk out there that, guess what? One of the ways that we're winning as markets cascade to lower prices is that people were flocking to our treasuries, which was decreasing the yield on the treasury that was going to allow us to refinance our ridiculous amount of debt at a cheaper cost. Well, that's not how it's playing out, folks. There is not an exodus to safety in the 10-year right now. We were at 4.38, and you want to talk about an acceleration, man? Let's see where we are right now. I mean, this is where we were this morning, 4.39. I'm not sure I've seen a half a point hike from the market in that short a period of time. Now, we pull back. We're at the critical level we were at coming into the end of March, okay? But boy, that is not where people are hiding as this is breaking down right now, okay? They're not flocking, and we're going to see what happens at 1 o'clock today in terms of a 40-year Treasury. That could be the argument that the Fed finally steps in. Finally. Okay? We'll see. About a 10-year now as we're approaching about 4.4%. Let's see where we are today. Just mammoth moves. From Sunday night, how about 4.5 points almost from Sunday night on the 10-year? And yeah, we're now above it. 4.41. 4.41, the yield on the 10-year. 4.41, just like that, man. Now, the dollar is weakening as the market is trailing off and yields are spiking. That's not a recipe for success, okay? The dollar is weakening as our yields are spiking. Dollar's at 102 right now. We were at 103.50 in the middle of the day yesterday. And that's at the same time that I just showed you what that yield spike looks like, okay? Those two charts might be the most decisive in terms of the risk going on and for a reason for the Fed to step in terms of a dislocation in that market. No one's flocking to yields right now. That's your 10-year. If you liked them at 114, you're going to love them today at 110, but no one's loving them today at 110. And guess what? We're going to be pushing out $40 billion worth of treasuries into the market, and that may be part of it at 1 o'clock today. We jump to gold. Weakening dollar, where are they flocking to? Well, they're not flocking to our 10-year, but they are flocking to gold. You talk about it, man. Gold up $85 on the session. Now, that's incorporating the overnight action, of course, but we were trading at around 3,000. You put gold on a daily, and that is a nice rejection of the 3,000 area. The one thing, look at the trail off in volume, right? The first move, dramatic volume, like anything else. Friday, a little bit lighter than Thursday's volume in the gold. That's because of the tariff acceleration that actually occurred on Wednesday night, coming into some of that gold contract. But you can see the trail off yesterday, and then we'll see where we go today. But big time volume today on that move higher and a nice rejection of price. Where do we bounce down to? We bounce right down to the 3,000 level, which was the last time that we had volume when you accelerated higher, and that was on March 13th when you reached that. We bounced right from that level. Nice critical 3,000 level on gold. And yeah, the earnings season begins. So, Delta, they come out with their numbers. We're going to be positive today on Delta shares. The headline there, when I talked about it last week, man, you're going to see it. It's going to be the norm. People are going to pull their guidance, especially after companies are already pulling by guidance. Okay? It cannot reaffirm its 2025 financial guidance. They cut their growth plan, and they're really not getting punished. Walmart scraps quarterly operating income forecast. But guess what? These companies are not getting punished, so why isn't everybody going to do it? Same exact thing would happen to COVID. There's Walmart trading basically flat right now. You jump over to Delta shares on that, up by about $1. Some of the airlines, United basically flat right now. We jump to the other. There's JP Morgan, going to be slightly lower. It's $2.15. Let's jump over to Target shares right now, slightly in the red at $88.37. TJX slightly in the red as well. All right, folks, stay tuned. We got 15 minutes until the opening bell. We got volatility in the markets. VIX back above 50. We're going to jump to some equities, folks. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got about 11 minutes to go until the opening bell. And if yesterday is any indication, right, what did we do? We traded higher for the first almost hour of the trading day. And then, boom, it was all negative action and nothing too surprising. And this morning, you have the escalation from China. And maybe that was the reality that set in yesterday, right? And so you buy the rumor or you sell the rumor. In this case, you buy the news, as in a lot of that factored in from yesterday. You got that reaction today in terms of 7 a.m. Put it back to a 5-minute to see the move in the markets. There was your rip lower on the S&Ps. You started about 5,028. You drive down to almost 4,900. Got within almost a couple points. Yeah, 4,901. And boom, like that, we're 100 points higher. We're back right where we were coming in to the China retaliation. So some of this baked in right now, for sure. Yesterday, which was so remarkable, and you talk about technical areas, folks, it's not in science, it's an art, but sometimes you don't need to give equities a lot of room from technical areas that are important. And where did that sell-off begin at? Almost the exact spike high that you got on the fake news that there was going to be a 90-day pause. In the S&Ps, you get up to 52.8650, and we peaked out yesterday within 20 points of that price level. And yeah, 20 points might be a lot, but it's not a lot when you peak out, and the move lower is 400 S&P points from where we were. Yeah, 53.0525, and your actual spike high was 52.86. You could have given yourself 20 points. First stop, you would have barely made it in there, and you could have gotten a 20-to-1 reward, even on a 20-point S&P stop. Sometimes, you got to have stops in this market, folks. Very tough to decide where you put those on occasion when you get this type of volatility, but I encourage you to get stops in anything you're doing and just trade it again with another stop. Do not let losses run in this market in either direction. Yesterday is just a great example, the last couple of days, in terms of you let losses run against you. There's no reason when you have this type of volatility and you can re-enter a trade. Okay, back to Walmart and Delta for a moment. So Walmart, they come out. And what is interesting here, interesting can mean so many things, right? But what to pay attention to here, their sales outlook is maintained. It's the profit ability, okay? So they're not going to transfer those costs yet, it seems like, because if they were going to transfer the costs, they would eat the sales growth. They're worried they're going to eat the profit right now, but that's not how it's going to go in perpetuity. So on a short-term basis, sales growth isn't going to decrease, but guess what? Margins are going to matter, and eventually, if they're making no money, the share price will matter, and they'll have to raise the prices. Right now, they're saying we're going to continue to grow in the sales outlook. They maintain the first quarter sales outlook 3 to 4%. And but they're not going to give you any guidance on profit. So they said in February that they would have a 1.5 percentage point headwind from acquiring Vizio, and that they were looking for adjusted earnings of $2.50 to $2.60 a share, which includes a 5-cent per share headwind. So the 5 cent doesn't even matter. So sales, not really a focus just yet. Profitability, going to be a focus. Delta, anybody on the fence right now that's worrying, not surprising that you say, you know what, we're going to scale back. We're going to see where equities fall. We're going to see where yields are. We're not going to book a $5,000 or $10,000 family vacation. So they're looking for a second quarter revenue to decline up to 2% or grow as much as 2%. Yeah, they don't know where they're going to be. Growth, decline. Too early to update its 2025 financial guidance. I would say so, man. And the reason why companies did not get punished during COVID is there was no realistic way to forecast. And the moment that it becomes, I remember saying to my dad during those times, why would any company try and forecast when you can take the forecast away and not get punished by the market? And you're probably going to see a similar reaction. Stronger companies probably going to be given more leeway than weaker companies when that happens. Company like Walmart, profitability, market doesn't even react. They won't reaffirm their profitability, and the market doesn't even react. But guess what? They're not worried about their sales outlook, and the market probably figures they'll get over that hump. And talking about airlines, interesting one from the Journal out this morning. Delta sets aside the previous outlook, right? And their headline: "Airlines' dreams of a banner year are over." Well, that says it, folks, and it says it lightly, as in you take a look at these charts, man. Now, Delta's going to get a lift today, but you're talking about trading below where we were at in August on the August lows. Always remember, folks, the market can do more than you expect quicker than you expect, because continually it plays out. Never would have imagined. Did things seem like they might be being a little lofty at $70 coming into January? We were already there following the election, right? We were trading at $57 prior to the election. You make it up to $69 with deregulation on the table, charging more fees, the market acceleration on tax cuts to 70, but to get cut in half over a period of 2 months, just remember, man, okay, it's always possible. Don't think it's not possible, especially in this market. United shares trading at 56, down from 116. JetBlue, it's not stopping. Really remarkable. That's a bearish engulfing of the last couple of days from JetBlue. You're down a couple pennies today, but look at that action yesterday in JetBlue. From $4.25 to $3.50. What is that, 75 cents? Did you lose 17% from the open yesterday on JetBlue when you're buying this equity at $4.20? My encouragement would be is if you're buying JetBlue, and listen, I find myself looking at JetBlue right now. Okay, it's always attractive to look for equities that have gotten decimated because we've all seen the turnarounds, right? Didn't even plan it. Carvana jumps to mind. There's your $3.50 gold mine that ran up to $300 earlier this year. Okay, so we get the attractive nature of these equities. The one thing I'll say is you get your back against the wall. Maybe you put a stop there, but if you're getting into this equity at $3.60, folks, you better believe there's a possibility you wake up one day and it's at zero. Okay. An analyst came out earlier in the week and said their bankruptcy probability was low, so they were actually attractive on there. But the charts don't lie, as they say, right? And you take a look at this thing, and yeah, you have a 2008 financial crisis level of 281 out there, but you look at this equity, take that one off there, and this is the internal battle I have with myself, right? It's man, JetBlue, they're probably going to be around. It looks like they're not going to go bankrupt as of yet, but boy, the chart's still saying it is. So if you're getting into this equity, okay, don't forget that there's a possibility when you're dealing with an airline that's only worth $1.2 billion, it looks like it's going to zero. It might go to zero when you wake up some morning. High risk, high reward sometimes, though. Find myself taking a look at that equity, but it's not stopping. Not yet. Looking for a sign of strength in JetBlue. All right, folks, market's in the red. We're coming back. See how this market digests as tariff wars ratchet up with China retaliating. We'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets open. NASDAQ 100 briefly positive for a moment here. We're going to get some volatility today. That's saying the least, right? You got the VIX right now, 52.66. That is some volatility. Putting it lightly, you have the Dow right now, negative by 0.9% or 362 points in the red. S&P's off about 0.5%. It's funny, only 26 points. It's like a heartbeat right now. It's 0.5%. But boy, in this market, with where volatility is priced, 20 to 30 points every moment. NASDAQ 100. You're off by 18. You put it on a 1-minute chart, though. We dropped 400 points in the span of about 120 seconds earlier on that China news. You get it all back almost. Yeah, almost all back. Market slightly in the red, but we were much lower coming into the open. Let's check back in on yields. The dollar, as I mentioned, Treasury auction going on at about 1 p.m. Eastern time today. $40 billion worth of 10-year. Watch that market on any news on how that goes into the market. And we check out the DXY. Yeah, pushing 102 right now. And yeah, gold has caught a bid, man. Up $91. Trading at 3,081. We hit a high earlier today at 3,091 at about 8 a.m. All right, let's check out some equities, individual equities, how they're opening. Apple shares, you catch a lift by about 1% right now. You jump over to Amazon, up by 0.8%. Microsoft shares in the positive by 0.5%. NVIDIA up by 3%, $99 trading at. Tesla up by 3% as well. All the important ones in the green right now. Meta shares up by 0.25% right now as well. And Google in the green by 0.1%. So S&P's red. Every equity I just went through is green. Mag 7. Barely, but green. Amazon, Apple up by 1%. NASDAQ 100 up by 100 points right now, or 0.6%. All right, speaking of Apple, you jump around. We all ready to buy our iPhones made in America? Well, the journal here, right? An American-made iPhone, just expensive or completely impossible? One of the things they talk about here is the millions of people that put these phones together, okay? And 40 different countries is what this is where it's so difficult when there's just any level of uncertainty, right? I love how they break this down, though. The sum of an iPhone's parts. The processor, Taiwan. Display, South Korea. The battery, $4 from China. That's not happening anytime soon. 5G cellular modem, $26. Memory from good old America, $21, and they break it down to $549. And there's automation coming, but one of the interesting parts of this, and you can't help everything. How does it play out, right? Automation's coming, production coming back to the U.S. If automation is there, then the jobs aren't there. If the jobs are coming back and automation's going to be what takes the place, then where does that fall in terms of how their revolution takes place, right? In terms of the whole workforce, et cetera. It is remarkable that we're talking about Apple. I mean, the humanity side of the fact that there's factories in China with nets outside the windows so people don't leap outside of the windows to commit suicide, right? How does that, on a full automation, go to American production when it's not quite there yet, okay? The products we do require advanced tooling. This is 2017. In the U.S., you could have a meeting of tooling engineers, and I'm not sure we could fill the room. In China, you could fill multiple football fields. There's going to be areas here that are just not as easy to turn the key and make the change. Now, as I pointed out, Apple, yeah. Yes, I will. I'll do it. I'll post this one in the den, folks. If you're not in the den, I'll post this one for a free one because it's an interesting one. Just breaking down 40 countries. And what they talk about here is that you could change the supply chain, okay, but could you make the whole thing here? No. Could you make probably more of the phone there? Maybe yes. Do you need certainty? Yes, you need certainty, okay? iPhones contain a patchwork of sophisticated parts sourced from many countries, put together primarily in China, but you see, okay, America doesn't have the facilities that resemble, nor does it have the skilled manpower. Now, it's real easy to say, well, just get the skilled manpower. That's the part of this conversation that just is difficult to grasp on a short and medium. Anything can happen on a longer term basis, but yeah, nonetheless, I will. I'll post a gifted article in the den of this one because you talk about a number of different factors, right? But you do talk, and that's where I imagine, you have the president touting Apple's $500 billion that they're going to spend. I imagine that's going to matter at some point in terms of, a $1,000 iPhone made completely in the U.S. would be a low-quality product, at least at first. Longer term, anything can happen. But how does that happen? I don't know how it happens, man. But I will post that at the next break. Yeah, we talked about it, the airlines. We talked about Delta, Walmart, China, and we'll see if there's a ramp off. All right, let's jump over to the home builders, because this one's an interesting one. Pulling back from 115, we jump over to Lennar. Yeah, it's a tough one, man. Look at these home builders. You can't even see the bid that they caught. Things have escalated so much with China right now. That's Lennar. D.R. Horton, down another 4% today on the escalation. You know, we have yield spiking to 4.4. It's pretty remarkable. The home builders, man, it is not stopping right now. Yields gave things a short reprieve, but that's not going to save anything right now as yields have reversed. We're actually higher from where we were. And the safe haven is not in treasuries right now. And as I keep bringing it up, because it's an important one, I mean, there's a dislocation right now in that market. You can call it what you want, man. But boy, that move in yields, okay? This is as the market's been tanking, folks. You just have yields spiking. No one's going to treasuries right now. If that's the case, then there's a real problem with an economic slowdown, higher potential prices, and we'll see where debt ends up costing us. But we're going to get an indication coming up at about 1 o'clock today. All right, we jump to some retailers. See how Walmart? Yeah, Walmart up by 3.3%. They don't even know how much money they're going to make next year. The market's like, that's okay. That's where the expectations are getting in this market. Target share is basically flat, up 0.2% right now. Amazon up 0.6%. Apple catching quite a little lift right now. Interesting on the escalations there. Found myself looking at Apple, and you should be looking for longer-term buys at this level, folks. If you're looking for longer-term buys, you got cash to deploy. There's nothing wrong with trying to scale in to some of these positions. All right? You're getting into Apple shares at 2021 prices. Now, the one thing to consider is 2021, you traded at 180, and this thing had a run from $30 4 or 5 years earlier. Okay, so you're getting in at a peak high after a 5-year run. Nonetheless, you were just trading at 260. You're getting in at 175. That's an $85 acceleration from where we're trading at right now, which would be a what? Almost a $50 increase from where we're at, 50% increase from where we're at right now. All right, folks, S&P's negative by just 3. It rolls over positive as we speak. S&P's positive, NASDAQ 100 in the green. Stay tuned, folks. We're coming back with our man, Teddy Kegstad. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets catching a bid. The S&P's up by 36 points right now, 5,057. How about the NASDAQ 100? Up by 228 points right now. And we're going to talk some currency, folks. You jump over to the dollar 102, 164. And, folks, as we do every Wednesday at 40 past the hour, we talk to our man Teddy Kegstad. Look at this market right now. It is a great market to try out, folks. The Tiger Forex Report, right under the newsletter tab at TFNN. You hit that subscribe button. You can try it out. 30 days, money back guaranteed. Check it out. And, man, we got a market. Teddy Kegstad, good morning.
Good morning, Tom.
So, where do we begin in this market, Teddy? We missed you last week. They were calling for you in the den. It was a busy week, but we got a lot to talk about, man. The market, of course, tariffs. But, you know, a lot of investors, we see the dollar action. Yields, I've been talking about, remarkable what's happening with yields. What are you watching most in this market? What do you want to talk to the listeners about and the viewers most of all, man? Where do we start?
Well, I like crude down $15 since last Wednesday, so I think that's not something to talk about. It's definitely influenced the yen. And the yield curve, I mean, wow, what's happened in the 10-year and the 30-year over the past week also, let alone today. So, we have some very extreme moves that have happened over the past just week that are definitely stirring up the currencies. So, and the volatility in the currencies, too, has been crazy. I mean, the Swiss has moved very radically compared to how it's normally been trading the past 6 months, especially. So you pick your poison. Where do you want to start?
Let's start with crude because, boy, okay. I mean, you pull it up on the chart, $57 down to 55. What do you make of this market?
Well, you know, in the Forex report, I said it was going to be bearish this week, looking for lower prices at the pump by the end of the week. I said a test of the 58 level was in the forecast. I honestly didn't think it was going to happen until next week. I'm happy that the market sold off that fast and that hard, but I really didn't see it coming that it was going to really hit there by today. So
remarkable.
I like the level. I would be very careful being a buyer at these levels. I like it as a sell rally forecast. I think if you're not, I mean, especially with the gap lower in crude today from the close to the open. So, you know, all gaps get filled typically. So I think that you probably we'll see over the next couple of days a spike back up towards maybe like the 60, 61 level, but then come back to where it's at. I like it at 58 and lower. I think longer term by month's end, we could see us setting maybe where 57 becomes the middle of maybe a $6 range trade, you know, where we'd be probably testing maybe the lower 50s and bouncing between maybe 60 and $52 for maybe probably going into Memorial Day weekend, if you will. And that also will help with the yen, which is definitely, I mean, it's got down to what was, I think, 145 now. That's a big marker for the yen. So I like the yen as a sell rally forecast too. That's overcooked. It's due to have a nice move to the upside, but not with this pressure on the dollar. It's impossible. The fundamentals and the technicals right now are just still, you know, right now they're in that power band mode. It's kind of like when when you're hitting the gas. Well, you know what I'm talking about. Like, so it's not like we're just accelerating. We're hitting that power band. It's like, the bears are, especially within the crude oil market and the U.S. dollar yen. They're in control right now. So you got to be very cautious and pick your points, and especially if you're going to try and counter trend. I would highly suggest you be very nimble if you're going to do that, because I can see you getting really chopped up.
Yeah, counter trend. That's a tough one with these trends right now, right? And I love how you lay out whether it's crude, and then you went to the yen, which was great. I was going to ask you, for those that haven't heard you talk about, Teddy, because I know, crude prices at $55. I was pulling up the chart of the yen when you're talking about it. I have it at 144 right now. I mean, geez, in January you were pushing almost 160. Right. But for those crude prices, for the listeners that haven't heard you, and the reason why I understand it is because of the fundamental lesson, you gave me, my dad, in terms of America being a producer right now, really, Japan being a consumer of crude, and how that relates to dollar yen and how those currencies move. Could you just walk through that one for the listeners that haven't heard that one? Because I love it, and what's going on right now, kind of so timely.
Sure. So we all know that the interest rate fund differential affects currencies. Then you look at something like Japan. When you have something that you're very dependent on, like oil, which they don't produce whatsoever, the price of oil is going to be very indicative of their production costs. So especially right now, considering where oil has been, this is a huge relief on the production side for Japan, even if it's only short-lived. I mean, just the relief that they've had so far from the slide in crude. I would say that you're going to see that impact in their economy really hit over the next 3 to 6 months. So that means that strengthens their currency also. And also the lower crude costs. You got to remember, the Japanese buy crude in U.S. dollars, so they have to convert yen to dollars as well. So when you add all these together, the lower those costs go, the less the value is of the dollar versus the yen. And as that keeps on, those fundamentals stay solid and in place, then that's how you develop the bearish trend in the U.S. dollar yen. Conversely, if all of a sudden oil was to start to turn around, and all of a sudden go back up to, like, even if it went back up to say just $70, that would definitely set up the U.S. dollar yen relationship to have a correction to the upside, meaning stronger dollar, weaker yen. Also, because it would affect the cost, and also mean that their economy is going to put a little drain on them in that short run period for that kind of situation. So fundamentally, you can help to figure out what side of the market to be in. In other words, if crude oil is dropping and interest and yields on the U.S. Interest rate markets are also dropping, it's very hard to be a buyer of U.S. dollar yen, because you're fading the actual fundamental trend. Now, technically, you may have whatever signal system you have or method may say, to buy right now, but you have to take into account that you're going against all the fundamentals. So you have to assume, like, especially in this situation, that the fundamentals are going to change. Like, if you're getting along to U.S. dollar yen right now, you're basically betting on crude getting a rally and also interest rates going higher. You know what I'm saying?
I love it, and that's really it's a great. Thank you so much, man, because I think a lot of people, I was unaware, and we know how currencies, of course, are fundamental to the country that underlies them, or that they underlie. But it is awesome when I don't think a lot of people would correlate to instantly the crude, and it makes such perfect fundamental sense that, they're a consumer of that good. They got to do it in dollars, and now they're only paying $55 US versus paying almost $80 US for a barrel of crude not that long ago. It's great, man. How about dollar Swiss? Can we talk about dollar Swiss? Because, boy, that is a move, man. My best friend lives in Switzerland. He's buying a house right now, Teddy, and he's excited that rates are actually crashing over there. No, I mean, there's a lot in dynamics, but he is right. But man, quite a chart. I have it up. Dollar Swiss.
So it's had quite the move over the past week. I mean, the Swiss is a very stable currency. It trends, and overall, the trend in the U.S. dollar Swiss is a bear. It has been for years. It is even if the dollar gains strength, no matter what, it's in a long-term bear market against the Swiss. Now you have all the reason also for it to dump, with yields being so low and with the dollar falling against other currencies. That's why you're getting the very bearish momentum there.
Can you stay with us for one more segment, Teddy?
Sure.
Perfect. folks, we'll come back. We'll finish this conversation. We'll talk a few more currencies. We'll talk a little gold. I want that take as well. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets in the green. NASDAQ 100 up by 1.3%. S&P's up by 0.6%. You get the Dow up by 0.3%. Apple up by 3% itself. Some big action in these markets. We're talking to our man, Teddy Kegstad. Don't forget to check out his Tiger Forex report, folks, with all this action. And, Teddy, how about the euro? I just want to jump to, of course, a huge component of the dollar index, euro-US dollar right now, we're pushing 110, kind of bumping up against an upper boundary. What do you think about the euro-US dollar right now at 110.36?
I think it's riding the yield curve trade right now, but it's a rally to sell. It's definitely a rally to sell. Same with the pound.
All right.
So their economies are collapsing. So.
I was going to ask the Treasury auction today. You look at that at all in terms of the $40 billion Treasury auction? Are you looking for some volatility? How do you approach an event like that? Is that on your horizon or a nothing?
If it was a bigger auction, yeah, but it's really not a big auction. I mean, honestly, with $40 billion.
Perfect.
So.
And how about gold? What do you think of this gold run, man? Volatility everywhere. We're up $104 right now, technically on the session in gold. Remarkable. What do you think?
Well, I like the high that was set last week, and I think it's a key level. If it gets above there, I could see it stretching up to maybe 32.25, around 32.25, and then I would be very, very cautious at those highs. Like right now, technically, the high that was set last week, harmonically off the low from November 14th of last year that this whole trend started off of, that's really the buffering right now. That's a great high that's set for, obviously, we've had a little correction. I like the rally today. I think if you're going to challenge those highs, once again, if it gets rejected, then I think you're going to set up a nice range trade in a correction that could probably take out the lows from a couple days ago. I think you're going to see a lot of volatility. If you get above it, like I said, I think you'll get to 32.25, and I think that will definitely be a short-term exhaustion top before you do see a correction.
$3,200 for 1 ounce of yellow gold. Not bad.
Yep.
Teddy, man, thank you so much. Folks, check out that Tiger Forex report. You get a month of it, some great information, especially with what the market's doing. Teddy, man, have a great week. We'll talk to you next week.
Thanks, Tommy. Take care.
Thank you. Folks, thanks so much. Stay tuned. Basil Chapman, he's up with next with the Tiger Technicians.